What's up, everyone? All right, so here we are finishing the week with another green day. So a great week overall, one red day, but 4 green days, that's good. And that's really the goal that I set for all of our students. I expect that each week you will have one day where you hit your max loss. So that means your weekly profit target is your daily goal times 3. You make your daily goal 4 days. The 5th day, you've got your max loss. That cancels out one of the days of your daily goal, your max loss being the same as your daily goal. So my max loss this week, biggest red day was $1,400. That took away one green day. So now I've got the weekly goal, daily goal times 3. So a good week, still a choppy market, a little bit of a grind, but hey, finishing the week on a green day is always good. Going to the weekend, feeling great. All right, so I'll break down all the trades. You guys have questions, comments, leave them below. I'll be going through and answering them over the weekend. All right, so I hope you guys have a great weekend. Relax. Those of you in the classes, study up. Monday will be here before you know it. All right, see you guys on Monday. All right, everyone. So we're gonna break down the trades here from this morning. Another green day. Really happy to finish the week with a green day. $640. Not the biggest green day of the month or of the year, but as of today, it puts me up $364,422.09 on the year, which is terrific. So, I'm in really good shape on the year, and I think at this point it's kind of just keeping up pace, and grinding on smaller numbers is fine, knowing that we will almost definitely have good opportunities, later in the year. Typically, the times that we see the most momentum is November, December, and January. That's usually when I make the most. So, I'm kind of right now just like, as long as I can keep on pace and not have any really, really bad months, then I'll be in good shape. August has not been the best month of the year so far, but I'm kind of pulling it back together, which is important. And, I'm thinking that things will start picking up a little bit more as we get closer to September. August is often slow. This isn't surprising or really particularly unusual. So you can see here $640, but I do have the alert on my account. Let me just turn on my drawing tool. So right here, all trading set to allowed, but this was not the case at one point this morning. At one point this morning, I was down more than $2,500 on a position, unrealized, and then it came back up. So we'll break that down. A little bit of a close call, and so that makes me even happier to finish the day in the green. Okay, so the two stocks I trade today, TIK and FFHL. So we'll start by looking at the gap scanner this morning. Today, just like every other day, starts with going over the gap scanner. So those of you who are brand new to the classes, who maybe joined during our workshop yesterday, what I showed you was this gap scanner that we go over every single day. So this morning at 9:15, this was the scanner. These were the two stocks at the top of the scan, IZEA and TIK. I've got $800 profit on TIK, so that was right off the scans. IZEA, this one I was not very interested in because I've traded it before and I've lost money on it. It's one of the stocks I've really just not done well on, so I was like, you know what? I don't really like this. If it does break over pre-market highs, okay, maybe I'll take a stab, but I'm not gonna push my luck on it if it's not looking good. And it's open to just sold off. So no trades on that, just no opportunity. All right, so next one, TIK. This one had a pre-market high of 490, but it sold off a little bit. And when I pulled up the level 2, I realized it trades in 5-cent increments. So you can see every quote is 5 cent. So 410, 415, 420, 425, 430. The problem with these stocks, so this is what you have to realize. What they did was they created a 5-cent tick pilot program and put about 1,000 stocks into this program. And so all of those stocks trade with 5-cent increments. So instead of having 100 increments between every dollar, right? So from $5 to $6 typically has 100 increments. There's 100 pennies, right? So, 401, 402, 403, 404, 405, etc. I don't have to count all the way to 100. So we've got 100 increments between every dollar. Now, when the market switched from trading in fractions to trading in decimals, that made the spreads down to 1 penny, right? So in 2000, 1999, 1998, before the market switched to decimalization, the tightest the spread would be was 1/16. So 1/16 is 6.25 cents. So basically, so you've got so 6.25 cents, 6.25 cents. So what that meant was that you were always trading with a 6.25 cent spread. That was the tightest spread you could ever have, which for us is like crazy because we're used to trading stocks that have a 1 cent spread. So what that meant was that market makers, the big institutional banks and funds and all that stuff, they were not able to make as much money. They make money, they make the market, which means they sit on both the bid and the ask. So here you'll see EdgeX is on the bid at 410 and they're on the ask at 415. So they're always on both sides. They're incentivized to be on both sides because they sell shares across the spread. So they profit from the spread. Okay, so for them, a 6.25 cent spread meant they made a lot of money, even on small cap stocks. With decimalization, they started making less money. And so as a result, there was, in the early 2000s, there was a decrease in the number of IPOs of small cap stocks. And so as part of the, I think it was the Jobs Act, there was a request by Congress for the SEC to try testing a larger spread to see if that would incentivize market makers and institutional banks to take on more small cap IPOs because they would be making more money on the spread. So this finally started in 2016. It took like 14 years for it to happen. Started in 2016, it was a 2-year pilot program. And so what it did was instead of having 100 ticks between every dollar, we went down to having just 20 ticks between every dollar. So 20 ticks and the stock could go up a full dollar. But because every order now had to be in these like trenches of every 5 cents, the bids and asks became much larger, right? You had to take all the orders that were typically across 100 cents and push them into just 20 blocks, into 20 increments. And so what you see is that these stocks move very slowly. They have lots of orders in every single tick. And so generally, we haven't liked them for day trading because the volatility has been so much lower. Now, I don't think the goal of the pilot program was to reduce volatility. The goal, as requested from Congress, was to see if it would increase investment in small cap IPOs, which would be good for, I guess, American companies. And all of the early reports have stated that this has not sparked interest to have more IPOs. So I don't think that it's been effective from that perspective. So most likely it'll get phased out. But in any case, and that'll probably be in this coming fall, 2018. But in any case, TIK is a 5 cent tick stock. And so when I pull it up here, I can see the 5 cent little sign here on Lightspeed that this trades in 5 cent increments. Now the problem with this stock is that if you put an order at 13 and press buy, it's going to get rejected. The price must be in nickel increments. It is such a pain. And so what that means is that all of my hotkeys to buy and sell, they'll get rejected. So because of that, my hotkeys don't work, and that means to trade these, I have to be manually typing in all of my orders. And it's when you're under the gun, you've got to quickly type in. It's so easy to have a typo, and then you've just screwed up. And so on my first trade on this one, when I jumped in, I got in this at where was it? Let's see, TIK. My first trade on this was getting in at 5, at 5 right here. I got in, it popped to a high of 520, it pulled back, and then I got in like, I don't know, it was like right around here, and it popped up to a high of 515 and pulled back, And I tried to take profit at 515 and I was too slow. And then it pops up to 520. I tried to take profit again and I sold half at like 515. And then I ended up stopping out of the rest as it came back down. And I only made like, I was up $450. And then by the time I finally sold the rest of my position, I was only up like $200. And so, you know, it was just like frustrating because you feel like you can't, I don't know, I'm just not equipped to really trade these ones. So anyways, didn't really do well on that. I got back in it right here as it started to pop up. You can see how it did this false breakout. I got in at 5, it pops up to 510. Sideways, pops up here to 510 again, and then drops. So on this one, I lost $300. And so I went down 200 on the name or something like that. It then curls back up here, and I said, you know what, I'm getting back in because this does look good. And that at this point now had a nice kind of 5-minute pullback. And so I was like, you know what, I'm getting back in at $5. I really think this looks good. This is flagging. This is a flag pattern. Got back in, 6,000 shares at $5. It pops up to a high of 540 right here, 40 cents. And then right here drops all the way back down to 495. So I ended up getting out with $900 profit. And so, or plus or minus. So now I'm up $800 on that stock. So that's good. I'm glad I'm green, but really didn't feel like I maximized on it. And I just generally don't like trading these 5-cent tick stocks. I just find them frustrating. So whatever. And for the most part, the 5-cent tick stocks don't make big moves, but this one did have a catalyst and did end up making a pretty good move. So, all right, so that was TIK. FFHL, this one really disappointing. On this one, it, let's see, where was this? Let me go back. So on this one, it popped up here from a low of $2.76, and then it surges up to $3.40. So as it's squeezing up, I see it not on my gap scanner, but on my high day momentum scanner. So let me scroll down here. So there's TIK, and then here we go. It's hitting once, twice, 3 times. When I see that, I get excited. And then again, 4, 5, 6 times, it's hitting the scanner. So I jump in at 311. I jump in at 311. It pops up to a high of 340, and I try to take some profit. I ended up adding at let's see, I got in at 313 and 320. So I had actually like a 315 average or 316 average, and it pops up to 340. And then on the next candle, it drops all the way to $2.65. So I was down $2,500. And this is the type of stuff that is really hard as a trader. When you're an aggressive trader like me, there are times that you're going to jump in to these stocks, and because you're going to know that there's the potential when a stock is moving this quickly that it could squeeze up, get halted, and maybe continue. At this point, the relative volume in the last 5 minutes was extremely high relative to what was normal, and it was up 25% on the day. So right from that perspective, even though the total volume was low, what it was doing was it was showing me it had the potential to move because it had already moved this much. Now, the risk is that, yes, they can go back down, obviously. So we've got risk to reward. In this this is kind of rare. We don't see that type of drop where it actually goes to like low of day and then flashes back up. But in this case, it happens. So in this case, I was in, it drops down, but I don't like to panic out. I don't like to sell as they drop like that. I like to give it a second, and then in this case, give it a chance to bounce back up. It bounces back up to 316, and so just like that, I go back to break even. Right? I was down $2,500, and then I'm break even, and so I got out for a small loss. And that to me was the right thing to do, just to basically unwind the position in a calm and composed way. I think on this one, in hindsight, sure, you could say, well, I should have waited for a 1-minute micro pullback or something like that. And maybe that's the right thing to do. I guess I get a little FOMO when I see the stocks hitting the scanners and just taking off. And I saw it pull back just kind of for a second here at 310 and then continue higher. So I was like, all right, this looks good. So I get in it right here as it's surging up, thinking next target 350. And kind of thinking, my stop is around 305. So having that kind of flush there where it suddenly in 10 seconds drops from 320 to 265, we just don't see that type of thing happen very often. So, I never like to see that. I was able to unload right here as it started to pop back up. But, it's, I guess, just kind of the luck of the draw when you're trading stocks of this nature. If you get on the wrong side or for whatever reason it starts to drop, it can be pretty bad. So, fortunately, I was able to mitigate the loss on that. And I think I still feel good about the rule of thumb of waiting for the first 1 minute pullback. However, 1 minute pullbacks can fail as well, as you see right here. This was a 1 minute micro pullback that failed. So, it's just to say that there is no such thing as 100% accuracy in any strategy. It just, there is no such thing as that. You might say, well, that was a bad trade, doesn't look good. And, in hindsight, yeah, I probably should have waited. And if I had waited, I wouldn't have ended up taking the trade. But if I wait on all of the stocks I trade, then I would also miss a lot of great opportunities, especially in strong markets. Typically, when a stock hits the scanner this many times in a row, it attracts a lot of traders because thousands and thousands of people are using these scanners. So they're seeing, okay, the stock is squeezing up. I'm going to jump in, try to ride the momentum. In this case, we didn't have a lot of momentum in the market today in general. So that was a little bit disappointing. Narrowly avoided a big loss. Got the warning here. When I was down more than 2,500 at that point, I would not have been allowed to take another trade. But as soon as the unrealized popped back up, I was able to keep trading because I was down only like $160 or whatever it was. So anyways, kind of a little bit of a choppy day, a little bit of a close call. So that makes me even more grateful to finish the day in the green, $640, and kind of at this point a clean slate. It's now taken me about 2 weeks to make back the 12,000 I lost in the first 3 days of the month. Disappointing as that was, that sometimes happens. And so let's see, this week I'm up, I was up 3,600 before yesterday, so I'm up about 4,200 on the week. So in the last 2 weeks, I've made $12,500. So I'm basically back to break even on the month, plus or minus a couple $100. I'd have to get into Lightspeed and see exactly where I'm at, but whatever. That's close to break even. So now I've got the next 2 weeks of the month to try to rebuild. Try to turn this into a month where I make a little bit of profit. So if I can make 5,000 next week, 5,000 the week after, I'd be up 10,000 on the month. Is that going to be the best month of the year? No, it's actually going to be my second worst month of the year. But typically August is not my strongest month anyways. So if I can just finish green, that would be great. My worst month of the year right now is 10,000 in the red in February. And then my second worst month is only $36,000 of profit in June. Think about that. That's kind of crazy that my second worst month of the year is $36,000 of profit. My third worst month is $42,000. My fourth worst month is $49,000. My fifth worst month is $54,000. Sixth worst is $74,000, and my my first worst, which is also my best, is $117,000 of profit. So anyways, that's kind of where we're at right now. And 600,000 was the goal for the year, and I'm I'm $300,000 off that level. Well, I guess I'm $240,000 off that level, but I'm a ways off that level. So I don't know if that's going to happen, but at the same time, if I end up having a great October, great November, great December, you never know. It could happen. So, of course, if I have 3 more months like this, then I'm going to only finish the year with another $30,000 of profit on top of what I have. So it's just, I just will be hopeful that we have a really strong market. And if we have it, I'll be aggressive. And if we don't, then I'll just have to stay disciplined. Something that a student said earlier, David, he said to one of the students if you're trading in the sim and you go to start trading with real money and you lose for the first couple trades, don't get bent out of shape. Just remind yourself you're the same trader who made X amount in the simulator. And that was really, really good advice that he gave. I myself have found that, there are certainly times where I've been in the red and I've had some bad weeks of trading or even a bad month of trading. And I have to remind myself, I'm still the guy who made, X amount last month or the month before. I'm still that same person. I just need to tighten up, focus, and be disciplined. So it sounds like that advice came from Arsh, and it might have actually come from me. So, but in any case, it's good advice wherever it came from, and I just want you guys to, stay focused on that kind of, that end goal. We're doing this. This is a marathon. It is not a sprint. We will have bumps in the road. You'll have setbacks, and you'll learn to get back up on that horse. That's part of trading. So let's see. I got a meeting here at 11 that I just realized I'm late on. So, anyways, I'm going to switch gears and jump into that. But I hope you guys have a great rest of the day. Warrior Pro students, we've got class in about 45 minutes, right at noon time. So stay tuned for class at noon. It'll probably be about 3-4 hour class today. I'm really excited about it. We're going to be covering the gap and go strategy. All right, so that's coming up soon, and I'll see the rest of you guys first thing on Monday morning. All right, everyone, have a great weekend. We'll see you on Monday. If you're still watching, you must have really enjoyed that video. So why not subscribe and get email alerts anytime I upload new content? Remember, when you subscribe, you become a member of the Warrior Trading family.